Imagine waking up to the news that $1 trillion just vanished from the US economy. No war, no warning, just silence, then panic. And behind it all, China. They didn't issue threats or hold a press conference. They simply closed the money tap, quietly, entirely. This wasn't some minor policy change. It was a financial power move that left US markets scrambling. So what really happened? And more importantly, what happens next? Let's break it down. On March 17th, 2025, China's State Administration of Foreign Exchange quietly ordered a full freeze on outbound investment into US companies. It wasn't announced. It leaked through regulatory filings. The directive labeled the US as a hostile jurisdiction. Translation: no more money from China. Zero. Back in 2018, China invested nearly $46 billion in the US. Now, it's officially zero. But this isn't just about what stopped. It's about where that money is going instead. This is more than a freeze. It's a shift. A redirection of global capital away from America. And it could reshape everything from corporate lending to everyday consumer prices. Strategic decoupling. China didn't announce this to stir drama. It made a silent move with a loud effect. Deals disappeared overnight. Investments collapsed quietly. Reuters confirmed the leak, but the damage had already started. Professor Dao Zheng called it a calculated move designed to apply maximum capital pressure on the US without triggering open retaliation. This wasn't an emotional decision. It was cold, strategic, and part of a larger plan. 2. Trade war becomes capital war. Its state banks also stopped US dollar transactions. Quiet orders, major consequences. Commerce Secretary Gina Raimondo said. China is restructuring its financial exposure in ways that sharply reduce our leverage. The old tools, sanctions, tariffs, aren't working. China is adapting faster than the West can respond. 3. The ripple effect. Foreign investment in the US dropped 22% in 2024. Early 2025 shows another 19% drop. Norway's fund pulled $7.1 billion from US tech. Japan cut its US real estate exposure by 30%. Meanwhile, $4.1 trillion in US corporate debt is coming due by 2026. With fewer foreign buyers, companies are turning to junk bonds. $430 billion worth issued in 2024 at an average 9.6% interest. Hartwell Tech, for example, lost a Chinese investment and had to borrow at 11.3% from Apollo, secured against its own assets. 4. Reshoring's harsh reality. Trump's 2025 reshoring incentives aimed to rebuild US manufacturing, but 62% of firms planning expansion are now stuck. Why? No funding. Projects once backed by China or Taiwan are frozen. $8B battery plant in Michigan, paused. $3.1B robotics center in Nevada, canceled. Intel's $20 billion Ohio chip factory, Phase 2 halted. Swar Prasad warned. Swysad diversified capital. These initiatives risk becoming symbolic instead of transformative. 5. The consumer fallout. Tariffs now hit over $500 billion in Chinese goods. That cost is reaching your wallet. A appliance prices are up 16.7%. Retail giants like Walmart are issuing margin warnings. The average U.S. household will pay $1,950 more this year, says the NRF. Corporate profits are falling. SPWU by earnings barely rose by dinar. In QC, Arling RC. Flat wages plus rising prices equals less spending power. 6. The confidence crisis. Uncertainty is surging. The Economic Policy Uncertainty Index is at its highest since 2008. CEO confidence has dropped to 37, a low not seen since mid-2020. Bank of America said, capital formation isn't stalling because of cost, but because of chaos. Indicated. 7. Allies, look east. China isn't just blocking capital, it's attracting it. European investment into China jumped 19% in Q1 2025. Saudi Arabia is shifting $27 billion into a joint AI fund with China and Singapore, Kenneth Rogoff said. Allies aren't defecting out of protest. They're diversifying to protect themselves. It's giving the world options. Q 12,025. 38 new IPOs in China, up 50. And it's working. This isn't a trade fight anymore. It's a shift in the global financial system. China didn't just freeze investment. It launched a quiet challenge to US dominance. If allies stop using dollars to settle trade, the US doesn't just lose deals. Some are financial, and they happen in silence. If this video opened your eyes, hit like, share, and subscribe. Do you believe the dollar is at real risk? Or will the US recover? Drop a comment below. We read every one. Stay informed. Stay sharp. And so is the money that runs it. See you in the next one.